Morning.
Madam.
Okay, you can hear me. Yeah, good morning. Okay, so I'm going to start the discussion on the previous exercise. Morning, Alicia, Haslin, Irfan, Heidi, and Ainu. Okay, let's check our exercise on 2.2H first. Hopefully you can hear me because it's a bit noisy over here.
Can hear, madam.
Can I? Okay, let's look at question number 1. Okay, if you can't hear me, let me know. Okay, number 1.
Madam.
Okay, thank you. A research is conducted on the cells of 2 types of curry puffs with sardine and potato fillings. In the first hour, 20 curry puffs with sardine filling and 18 curry puffs with potato filling are sold, and the total amount of sale is 28 ringgit 80 cents. In the next hour, 30 curry puffs with sardine filling and 14 curry puffs with potato filling are sold, and the total amount of sale is 29.20. Okay, so calculate the prices of a curry puff with sardine filling and a curry puff with potato filling using the matrix method. So you just need to find out the price of a curry puff with the potato filling and also the sardine filling. Okay, so first of all, we are going to make assumption. Let X be the curry puff with sardine filling and Y be the curry puff with potato filling. So from what is given in the statement over here, you can create or you can come up with equation already, whereby 24x plus 18y equal to 28 ringgit 80 cent. And for the next equation will be 30x plus 14y is equal to 29 ringgit 20 cents. So from there we have these 2 equations. Okay, just convert it into the matrix form. So this is the matrix form, and then to find out the value of y, you are going to inverse the first matrix over here. It becomes 1 over 24 times 14 minus 18 times 30, and then this one change it into a negative d negative c b. This one, and you multiply by 28.8 times 29.2 over here. So lastly, you will get the answer is 0.6 and 0.8 like this. Check your answer. Then lastly, you just answer the question. Does the price for a curry puff with sardine filling equal to 60 cents and the curry puff for a potato filling is equal to 80 cents? Okay, next we move to the second question. I think all the questions here, you won't have problem lah because it's quite easy. Question number 2, Ahmad spent 68 ringgit a week on 2 sports that as mentioned below. So this one is swimming, this one is playing badminton. Calculate the time in hours Ahmad spent in the sports club for swimming and playing badminton in a week using the matrix method. So from what Ahmad said over here, he spent 10 hours a week for swimming and playing badminton in sports club. So same thing, I made assumption over here, let x equal to swimming, let y equal to playing badminton. So x plus y is equal to 10 because he spent 10 hours on swimming and playing badminton. So this is the linear equation that we have. After that, he spent 68 ringgit a week on 2 sports. So the 2 sports that cost of that cost of swimming is 8 ringgit per hour. Cost of playing badminton is 5 ringgit per hour. Therefore, it is at x plus 5y equal to 68. So convert it into matrix form and you find out the value of xy. So xy is equal to 6, 4. Okay, meaning that he spent 6 hours in swimming and 4 hours in playing badminton. Okay, check your answer. Then we move to the last one now. Okay, last one here. Injet Jeffrey and Injet Dan invest in unit trust P, this one, and unit trust Q, this one, as shown in the table below. So after a year, Injet Jeffrey gets a dividend of 350. That's why I write it down here. He got 350 out of his investment on both of the unit trusts, while Injet Dan gets a dividend of 440. Okay, so calculate the dividend rates of unit trust P and unit trust Q using the matrix method. Therefore, again, we cannot use a capital letter P and Q as our variable over here. You have to make assumption again. So let the small letter P is equal to unit trust P, and let the small letter q is equal to unit trust Q. You got to remember in our linear equation, we only can use the small letter variable. Okay, so I have 5,000 P from here plus 3,000 Q is equal to 350. This is the first equation. And then followed by 6,000 P plus 4,000 Q equal to 440. This is the second linear equation. Okay, convert it into the matrix, so it looks like this. And then you find out the inverse of PQ, not the PQ, find out PQ, so it's the inverse of this matrix. You multiply by 350 and 440 at the back, and you will get 0.04 and 0.05. So this means 0.04 here, it means the dividend rate for unit trust is 4% because 0.04 is 4 over 100, so it's equal to 4%. And for dividend rate of unit trust Q is 5% because it is 0.05. Okay, I think you should get it right. So do you have any question regarding this exercise? Any question, class?
No, madam.
No? Okay, then we
Yes,
proceed to the next one. So just now you've watched the video, right? The video that I've just let you watch is regarding, if you see the last part, is regarding insurance. Okay, so that is the topic that we are going to enter to today, which is the consumer mathematics insurance. I'm going to talk a lot today, so most probably our class will end at maybe 12:30. Okay, so you got to be ready for it. If you want to go for a restroom or you want to have some drink, you just let me know. Go ahead, but before that you let me know so that I don't call your name when I ask question later on. There's nobody to answer me. Okay, let's start. So this one I will close it now. Insurance. Okay, I cropped this out for you. This is at the summary part of your textbook. Okay, for this chapter, this is what you are going to learn. Risk and insurance coverage, whereby first of all, today you are going to learn about risk, what is the meaning of risk, and what are the insurance that involved. So insurance is divided into two. First one is life insurance, and then the second one is general insurance. We are going to talk more about the general insurance over here, especially the motor insurance. Okay, so after that, you are going to learn on the calculation of insurance premium, this one. We are also going to learn it today, whereby you are going to learn what is the face value and the premium rate and so on. After that, in this chapter, you are going to learn to solve problem, and then this part will involve the deductible and core insurance. In the insurance later on, you are going to see what is the deductible and core insurance. This one we are going to learn in the next lesson. So today we are going to cover a lot of things, which is the whole thing right here. Okay, let's move to it. The first part here, consumer mathematics insurance. So what will you learn in this topic is risk and insurance coverage. Okay, why study this chapter? I think just like what you learn in Form 3, you study the investment and so on, because you are going to face this in your real life later on. You are right now 17 years old, 16 years old. So when you go for work later, you are going to need this, because you are going to buy insurance for your own life. It's up to you. It's your choice whether you are going to buy or not. But another two things that for sure you are going to buy is car, right? So you must insure your car. And then the second thing is your property. If you are going to buy a house or anything, you are going to insure your house too. So let's see what is the reason stated over here. The knowledge on risk and insurance as a financial protection is very important for every individual as a preparation for the future. It is also very important in personal financial management, because we might use part of our income for insurance. Okay, that's very correct. We use part of our income for insurance. Okay, that's why later on in the next chapter, you are going to learn about tax. Tax also involves insurance. You are going to deduct the payment of insurance over there. That's why you learn this chapter. Okay, do you know In Malaysia, the insurance industry is controlled and regulated by Bank Negara Malaysia under the Insurance Act 1996. So you can see this is the act, Insurance Act. It becomes smaller. Okay. Which replaces the Insurance Act 1963. So the latest one is 1996. This act complies with the regulations of insurance and serves as basic legislation that controls the insurance business in Malaysia. Apart from this act empowers Bank Negara Malaysia to determine matters in accordance with the provisions of the act. Okay, so this one, do you know you can go and scan it yourself to find out more information in it. Okay, so this is the word band that you are going to learn today. The general insurance, this one later in next lesson. Life insurance, rate, co-insurance in the next lesson, coverage, policy, premium, risk. Okay, so don't have to worry, I'm going to go through later on. Now we look at the right here. We often come across news and headlines in the media of families being affected by disasters such as flood, fire, theft, and accidents. Have you ever thought that you and your family might face such a disaster in the future? Yes or no? If no, okay, then you don't have to worry about this one. If so, is your family ready for it? You got to know whether you're ready for it or not. If it happens to us, we would definitely have to bear the financial losses. Therefore, it is very important for you to understand the importance of insurance because insurance helps us to face uncertainties and losses. Okay, so if you are going to buy insurance, you must have a sum of money. That is very important. I need to move this down. Okay, let's look at the next one. We enter into this risk and bad insurance coverage. So before I enter into risk and insurance coverage, you need to know this part here, the learning standard. In this chapter, it's very important for you to explain the meaning of risk and the importance of insurance coverage. Hence, determine the types of life insurance and general insurance for protecting a variety of risks. So first of all, you need to know what is the meaning of risk. Okay, now look at this part here. This is a picture. A car collide with another one, and then this person, it becomes something like having a broken leg, and then this one, the house is in fire. So do you know that every one of us is exposed to danger that might happen to us, our family, or our asset? This can happen anytime. Okay, now we look at what is given down here. A road accident that injures the driver and passengers, damage of property in a fire, expensive medical bills due to critical illness, and others may occur in life. It is certain that this incident caused us to bear some losses. The fact that we are exposed to such losses are the uncertainty of whether these incidents could happen to us, create a risk in our life, therefore in general. So you need to know this. Risk is the possibility of a disaster that cannot be avoided. Okay, I saw that in the exercise they were not giving you this question over here, but you got to memorize no matter how, because we scared that sometimes they will ask what is the meaning of risk. So you got to mention risk is the possibility of a disaster that cannot be avoided. Can you avoid a house being on fire? We don't know what that will happen, right? Can you avoid the accident? You can just try to drive safely, but you can't avoid people collide the car into you, bump into you. We can't avoid that. So it is a disaster that cannot be avoided. Can we avoid flood? Also cannot, right? Can we avoid what you call it, lightning? Also cannot, right? So look at this part here, important elements in the definition of risk. So risk is unpredictable. Risk involves loss. Okay, so I'm going to go through a bit fast over here. This is a lot of explanation. You go through it yourself. It's quite a lot. You go through this yourself. I'm going to enter important points. Okay, because I scared if I read out everything, you feel sleepy already. Now, we look at insurance. Just now it's about risk. Do you still remember the meaning of risk? Hopefully you still remember. It is a possibility of a disaster that cannot be avoided. Hope you still remember. This one. Okay, we go back here. Insurance. Okay, what is the use of insurance? Insurance is intended to transfer risk from individuals. Oh, I know why it becomes smaller already. Okay, wait. I need to enlarge on the right. Okay, so it is intended to transfer risk from individual to insurance organization. Individual means we, ourselves. Okay, so you need to know in between we, the insurance organization, what are the specific terms that is used. Okay, it is contract signed between the insurance company and the insurance owner, that is us. Under this contract, the insurance company promises to pay compensation for the loss covered in the policy in return for the premium paid by the policy holder. Okay, so policy holder, we are the one, the individuals, we pay the premium. The payment that is paid to the insurance company, we call it premium. Okay, and then if there is any loss or anything, the insurance company is going to pay the compensation for the loss incurred. So you look at the info bulletin over here, you need to know the party that is involved in the insurance. So insurance company, I'm sure you know this already. This is the party that agrees to pay compensation for the losses of the agreed terms. Okay, now my question for you. Do you know any insurance company that come to your mind? Or for example, what insurance that you have bought from which company? Can somebody answer? Any insurance company? Okay, what is the company that you know, Shauki?
AIA.
Oh, thank you, AIA. Any other class?
Prudential,
Alliance.
madam.
Very prudential. Any other?
Alliance.
Alliance, correct. Any other? There are a lot actually.
Is it the Alliance with Z, madam?
Alliance with a C.
Oh,
How do
yeah.
I spell it? Correct or not? C, right?
Z, right?
Oh,
ALLIANZ.
okay. Thank you. ALLIANZ.
Z,
Yes.
yeah.
Okay, thank you. Any other? Start with G. Great Eastern. Any other? Tokyo Marine.
Zurich.
Yes, very good. Zurich. Any other that didn't come to my mind?
Takaful.
Okay, Takafu is actually a general name for the insurance. Takafu, you have to see is Takafu from which company, insurance company, or from the bank also sometimes we have it. Any other?
SCP Group.
SCP
Group.
SCP, is it?
Yes.
Oh, I never heard of this one. SCP Group. Okay. Any other? We have quite a lot already. 1, 2, 3, 4, 5, 6, 7, 8. Okay, we stop here unless you have any other, because I can't think of any right now. So let's go through. That is the insurance company. This one, the one that we mentioned just now. After that, the second one is the policy holder. That is us, the insurance owner. Okay, it is the individual who will claim and receive the compensation for the losses. This is us. After that, we need to know the insurance contract. So that is a policy and an evidence of an agreement made between the insurance company and the policy holder. Usually after you have bought the insurance, they will give you, it depends on what insurance. If you bought the life insurance or medical card, you will have a book, a thick book that will be given that is referring to the insurance contract. After that, the premium, like what I told you just now, is an amount of money that is payable by the policyholder to the insurance company. So the monthly payment, or we call it premium. Okay, next. Look at this second paragraph here. The amount of compensation payable to the policyholder is only the amount of the loss suffered. Okay, for example, if you have a loss of, after your car is damaged, for example, you need to repair your car for 2,000. So they won't pay you more than that. You are only paid to the amount of the loss suffered. This is because the key principle in the insurance system is to restore the financial position of the policyholder to the pre-loss condition, which is known as the principle of indemnity. So you need to know this word, principle of indemnity. Okay, and then on the right of the info bulletin over here, the meaning given is a bit different from this one. That is to restore the financial position to the pre-loss condition. Then you look at this one, it's a bit different. So it's up to you which one you want to choose. Principle of indemnity over here means insurance company will pay compensation to policyholder in the occurrence of a loss insured for an amount not exceeding the loss incurred, subject to the sum insured. So this is a very long explanation over here. Okay, now we continue here. Therefore, the insurance principle will not allow the policyholder to gain profit from the insurance purchase. The purpose is not to gain profit. The purpose is to restore your financial position. Okay, that's why I highlighted this. Then we look at the third paragraph here. Insurance cannot prevent a loss from occurring, but can help to reduce financial burden borne by a policyholder in the occurrence of losses or accidents. So they can reduce the financial burden. This is because buying an adequate sum of insurance removes the uncertainty of financial loss in the occurrence of the loss insured. Okay, so we continue. A lot of theory today. What are life insurance and general insurance? So insurance can be divided into two main types, namely life insurance and general insurance, like I've shown you just now in the beginning. Both of these insurances protect different risks. Let us see what are they. Oh, now I adjust this for a while. Okay, let us move into this one. The mind mobilization, I'm going to skip that. I'm going to enter the life insurance here straight away. Okay, life insurance guarantees the payment of a stated amount of monetary benefit to the policyholder upon the death of the insured. Sometimes there's no death, then what will happen? It depends, or under other circumstances specified in the contract. So the risks covered by life insurance are as follows. There are three risks that is covered. The first one is death. Death is covered to the family member. Okay, this one, the family member who depend on the policyholder. If the policyholder is dead, then the family member will benefit from it. And it also covered the critical illness, that is the policyholder themselves, and the loss of ability, meaning that you cannot walk anymore. So this one is also covered. Okay, there are the three risks that is covered in the life insurance. Okay, so we enter into the general insurance right now. General insurance provides coverage against any loss or damage incurred. Okay, apart from the risk covered by life insurance, there are many types of general insurance that cover a variety of risks. So we need to know the type of general insurance. So let us move to the types of general insurance up here. Okay, so you can see there are 5 types of general insurance. The first one is motor insurance. If you buy a car, then you are going to insure for that. Fire insurance, medical and health insurance, personal accident insurance, travel insurance. So we are going to go through one by one. First, we are going to go through the motor insurance. Okay, you can see down here is about the motor insurance. Motor insurance provides coverage against any loss or damage. So I'm sure if sometimes your parents or anyone related to you, when they have accidents, so they will ask is their accident is covered by the policy or the insurance or not. So you will ask about it. Okay, before I enter into the policy, the table over here, the 4 types of insurance policy that cover the vehicle. Let's look at what is the purpose of a motor insurance here. Motor insurance is a compulsory insurance that every motor vehicle in Malaysia must have under the Road Transport Act. So, which means next time when you buy a car or you buy a motorcycle, you must cover the motor insurance, no matter how, no matter you want or not, it is compulsory. Okay, so now we look at the policy. There are 4 types of policy over here. This one is under the Act, so it's considered one type of it, meaning that if you don't want to buy any insurance, but under the Act, you still have to pay for it. And then we have the third-party policy. We have the third party with the fire and theft. This one is additional. And then the one that we usually or your parents bought is the comprehensive policy. So let us look at the first one here. Under the Act is Road Transport Act 1987, which is given already. So what is the coverage over here? You can see it only covers one thing, which is the liability to the third party due to injury and death. Okay, meaning that if you bump or collide into the third party, so you're under the Act, they are going to cover the injury and the death of the third party. Okay, that's why under the motor insurance, the Road Transport Act, that makes you the insurance a compulsory insurance. Okay, after that, you can buy just the third party policy only. So for the third party policy, they cover the first one, cover the third party due to injury and death, and also they cover the loss of property suffered by the third party, for example, their car. Okay, but then they don't cover this. So we look at the third one right now. Third party, fire and theft. This is the additional one. So they cover the first one, yes. They cover the loss of the property, yes. And then they also cover the loss to own vehicle, meaning it's your own vehicle, not only the other side, due to accidental fire or theft. So it can be if your motor is on fire or somebody have stolen it, so you can they are going to cover you for this one. Okay, and the last one they didn't cover. So we look at what is the last one under the comprehensive, meaning that they cover everything. You can see yes, including the last one. Last one is the loss and damage to own vehicle due to accident. Okay, so the one that we usually buy, they cover everything. Cover the loss and damage to your own vehicle, cover the loss to own vehicle due to fire or theft. Okay, meaning somebody stole your car, and loss of property suffered by third party, and the liability to third party due to injury and death. Okay, everything here. I think maybe you don't know what is the meaning of third party and also your own yet. Let's look at the info bulletin here. This part is very important. Okay, in motor insurance, the first party is you, ourselves. We call it the policy holder, the driver also. That is the first party. The second party is the insurance company. Okay, and the third party is any other individuals that are involved in an accident caused by the driver, ourselves, or caused by the other driver, excluding the passenger, not including the passenger, only the driver. So we have first party, we have second party, we have third party. First party, ourselves. Second party, insurance company. Third party, the other individual. Okay, make sure you can identify it. Okay, so you can look at the paragraph even here. This one, a comprehensive policy provides a thorough protection compared to the other 3 policies as above. The similarity on this policy is to give a protection excluding the claims by the driver and passengers such as injury and death. Okay, which means it doesn't include the claim by the driver and passengers such as injury and death. As an example, Agus was driving his car. So over here, Agus, the driver, with his friend Faisal. Okay, Faisal sit at the back. And then Agus lost control and knocked into another car driven by Devi. So Devi is driving this car. He knocked into Devi. So there is an accident. Okay, after that, Agus, Faisal, and Devi were injured. 3 of them were injured, and Agus and Devi's car were damaged. Okay, so we see how is the condition. Down here. If you still remember, if you still remember the figure, let me copy the figure down here. It's very hard to adjust this. Okay, if Agus insured his car under the comprehensive policy, meaning that it covers everything, comprehensive policy. Right. Okay, this policy will cover injury and car damage claimed by the third party, who is Devi. This is the third party lah. So if he's injured, okay, it will cover the injuries and also the car damage. And then, and the loss and damage of Agus' car. So also will cover Agus' car. However, the medical costs incurred by Agus and Faisal will not be covered. Meaning if Agus and Faisal is injured, the policy will not cover. It only covered the injuries of Devi, the damage of Devi's car, and the damage of Agus' car. But if they got injured, they need to go to the hospital, they have to pay themselves. Okay, that is under the comprehensive policy, this one. Okay, now we look at fire insurance. That is the second of the general insurance. Fire insurance is usually for the house. This one, Fire insurance provides coverage against damage caused by fire, lightning, and explosion that occur at home or business center. Compensation will be paid by the insurance company to recover the policyholder financial position, subject to the sum insured. For coverage other than fire, lightning, explosion, this one you need to know. If they ask you what are the coverage caused by, what are the coverage for fire insurance? So the coverage is fire, lightning, and explosion. But besides that, sometimes we also have natural disaster. So you may incorporate with additional coverage such as hurricane, flood, riot, and others into the existing fire policy as an additional premium. So as an additional premium over here, you need to add the payment when it comes to this. Okay, let us look at the third one, the medical and health insurance. Apart from the risk of health, you should also be aware of the risk of deteriorating health. Means your health is deteriorate. This is because you may have to bear medical expenses such as hospitalization and surgery costs. Okay, these two. Some of the policy in this insurance are hospitalization and surgical insurance. Maybe you need to go to surgical, so there are insurance that cover this. Critical illness such as I'm sure you know like cancer or like dialysis and so on, cancer. And then disability of income insurance, meaning that you cannot go for work, so disability of income. And then hospital income insurance, meaning if you have surgical, you need to go for surgery, so you will have to stay at the hospital, and then sometimes they have the cover for hospital income. It depends on how many days you stay, then maybe one day 100 ringgit, 2 days 200 ringgit. They have this kind of policy. Okay, that is about medical and health insurance. I just bring over only this few because we still don't have what do you call it, calculation for this one. Okay, then it comes to PA. PA means personal accident insurance. Okay, PA is different from the rest. We look at the paragraph here. Personal accident insurance provide coverage in the occurrence that the policyholder suffers a bodily injury, disability, or death resulting directly from accident. This insurance is different from life insurance and medical and health insurance. Okay, this is extra insurance whereby you meet with unpredicted condition. For example, when you walk along the street, something fall down and something fall down on you and then you suffer the injuries. So this insurance will cover it. Okay. And then lastly, we have the travel insurance. Travel insurance cover 3 types, which is by land, by air, or sea. If you travel to the air, I'm sure you know lah. For example, if you use AirAsia, we have the Tune Asia insurance. And if you cover by land, also we have the travel insurance. For example, if you travel using the bus, the what do you call it, the traveling bus, the one that's specially to bring you around for vacation. Okay, that one also have. And then C, for example, if you go on cruises, they also have this kind of insurance. Okay, so such as death and permanent disability, loss of luggage, passport and money, medical expenses, and others. So I can talk about this for you, the A insurance, because it ever happened to me when I traveled to Taiwan. Okay, I can't find my luggage during the arrival, so I have to make a report over there, and then luckily I bought the insurance lah, so they will cover for it, but they only cover a few days until you get back your luggage. So the first and the second day, actually I've bought a lot of things to replace it lah. I need to, because I lost my luggage, right? So a lot of cloth I don't have, so I need to go and buy, and shoes and so on. So you keep the receipt if this happened to you. You keep the receipt and then you can claim it after you get back home. Okay, by the day your luggage is arrived, then the receipt that you have kept cannot be covered anymore. Okay, it's before your luggage or before the day of your luggage arrive. So the travel insurance will cover it. Okay, including the rest lah. Or as you can see, for example, the medical expenses. This one also, it happens to my neighbor, whereby he traveled to, where did he travel? Oh, he traveled to Japan. He go and find his friend. And then his friend brought him to do the ski. They go for skiing. But then he fell down during the skiing, and then he broke his leg. So he has to stay hospitalized. Okay, so this one, he covered the hospitalization and the treatment during that time. Okay, so this is about travel insurance. Okay, then we move on. We are going to enter the calculation part. This is extra thing over here is the group insurance. Okay, I'm sure you ever heard of this group insurance. Sometimes it's offered by Great Eastern and other for a group of people. So it provides the coverage to a group of individual, typically an employee in a company or pupils in school. Okay, so you can see that the group insurance for organization. Financial protection is provided to employee of an organization in the event of death, disability, hospitalization, and surgery. Okay, under certain policy and coverage limit. So if you bought 2 insurance, for example, you bought the medical insurance and you also buy the group insurance for this one, meaning that you'll be covered on both sides. This side will cover you for this, and then you can claim on both sides. But not everything you can claim. For example, if you bought life insurance, no. For example, if you bought medical insurance in Great Eastern and then you bought another medical insurance in Prudential, then for this kind of case, you only can claim one side only. Okay, because just now I mentioned the medical insurance for other company and then group insurance that is by your organization, right? So that's why you can claim on both. Okay, but you don't worry about the claiming lah, because at this time you are going to learn about the calculation on the payment of the premium. Okay, so we look at the next one here, the group insurance for pupils. Financial protection is provided to pupils in the events of death, paralysis, disability, and wheelchair allowance under certain policy and coverage limit. For example, Ministry of Education has implemented a protection scheme for pupils of government school and government-aided school under the Takafu Pelajar Sekolah Malaysia TPSM scheme. So this one you can read about it. Okay, for example, this one, the My Salam, this one. My Salam National Health Protection Scheme is an initiative started by the government which aims to provide 8 million Malaysian citizens with free Takafu protection. So this one you can visit for more information. I didn't visit. If you want to visit, you can go visit. Okay, generally, The reason you should get an insurance are as follow. First reason, as a financial aid to the family in the occurrence of a disability, critical illness, or death. Okay, if you are not from a very wealthy family, so you should go for it. Okay, it's a financial aid for you. And then the second one, managing living expenses, debts, and commitment in the event that you are unable to work. If you cannot work, so it, somehow they will provide you with some kind of money so that you can manage your life. And then the third one, paying for high medical expenses. For example, when you are already, you found out that you have this kind of disease, you have to go for surgery and so on. You don't have enough money because sometimes it costs about more than 10,000, 20,000. And then sometimes if you want to look for a specialist, you can't find it here. You have to go overseas. You have to go to Singapore and so on to do the surgery. So they are paying for high medical expenses. Okay, and the last one is compensation for losses incurred. This one is for sure lah, just as a compensation for all your losses. Okay, let's look at self-practice 3.1a. This one we go through orally. Yeah? Hopefully you still remember what did we talk about since the beginning. Okay, number one, based on the situation below, answer the following questions. Okay, look at the situations. Encik Daud buys an insurance policy to cover himself in case of an accident from Syarikat Insurance Bersatu for 300,000 with a monthly payment of 100. Okay, look at A. Who is the insurance company and the policy holder? So from that situation given, who is the insurance company? Can somebody answer? Anyone can answer from here?
I can, madam.
Okay, Aiman, what is?
The insurance company is Syarikat Insurance Bersatu,
Yes.
and the policy holder is Encik Daud.
Yes, very good. So this one is the answer for the insurance company, and Encik Daud is the policy holder. Thank you, Aiman. Very good. Okay, now we look at B. Yeah. Because this question is easy, that's why I go through with you first. How much is the coverage limit? Anyone can answer me?
300,000 ringgit.
Yes, correct. 300,000 ringgit. Very good. Hedy and someone answer me. Who was that just now?
Gary Vino.
Oh, thank you, Gary. Good. Oh, Gary, pay attention. See, how much is the
Yes.
monthly premium? Thank you. How much is the monthly premium? Anyone can answer me? You look at the
100
question.
ringgit.
100 ringgit.
Yes, correct. 100 ringgit is the monthly premium. Next, state the risk to be insured. Okay, what is the risk to be insured over here?
Accident.
Accident.
Okay, accident.
Accident.
Actually, this one is referring to PA. PA means it is personal accident. So he didn't buy the life insurance or anything. He is buying this type of insurance. This one. Personal accident insurance. Okay, it means it provides the coverage in the occurrence of the policyholder suffers of bodily injury, disability, or death resulting directly from the accident. Okay, so this is the one that Encik Daud bought. Yeah. Let's look at the next question. Okay, we look at question 2. That is 3.1a. Where is it already? It's a bit messy here. 3.1a, page 79. Okay, page 80, this one. Now we look at this question. One day, Melissa's car collided with another car in an accident and she was at fault, meaning she is wrong. Both cars were badly damaged and the other driver suffered a broken leg. Okay, so Melissa drove a car and then the other driver here, he broke his leg. Okay, Melissa wants to file a claim for the damage of both cars. Okay, she wants to claim damage for her car, also the damage for this car, as well as the medical expenses for the driver of the other car, and also medical expenses. Okay, let us see whether she can do it or not. So, I write down everything. This is the damage of the car. This one also damage of the car, and then medical expenses of the driver over there. Okay, now we look at the question given. Based on the scenario above, state the claim that Melissa can make from her insurance company if she insures her car under the third-party policy. Okay, you remember this, She wants to claim for her car and also the other, and then she wants to claim the medical expenses for the driver. So under the third-party policy, okay, we go back to the third-party policy, see whether she can claim it or not. So you got to refer to that. I go and reopen again. It's open and close. This one here. Okay, I clear everything first. So we look at the third party. If you look at 1, 2, 3, 4, which one is the policy? 1, 2, 3, 4. Which one is the policy of the third party? Number 2, right? Yes, number 2. So first, it covers liability to third party due to injury and death. Cover, right? Okay.
Yes.
And second, loss of property suffered by third party. So this one, loss of property or suffered by the third party, yes, already covered. Loss to own vehicle due to accidental fire or theft is a no over here. And loss and damage to own vehicle due to accident also a no. So like just now, Melissa want to claim for both vehicle and also the injury. So which one cannot be claimed? Any idea? Correct. Melissa's car, her own car cannot be claimed. She only can claim because it's a third-party policy. She only can claim the damage for the third-party car and also the injuries for the third party. Okay, so that is the question about. Hopefully you know how to apply it. You have any question regarding that exercise? Any question on this Melissa's situation here?
No questions.
No, because according to the third party, she cannot claim for herself. She only can claim for the third party only. So that's why the better if you buy the comprehensive insurance for your car. Okay, because it covers everything, including your own car and your own injuries. Not your own injury, only your own car. Okay, now we look at the next one here. How to investigate, interpret, and perform calculations involving insurance rates and premium. So this one, they are showing you on how to read, interpret from it, and then how are you going to calculate it. So we go through slowly. This is easy. This example is easy. No worry. So the table below shows the premiums for travel insurance. Offered by Syarikat Insurance PQ Berhad to countries in Asia and Europe. So the insurance company is Syarikat Insurance PQ Berhad. Okay, that is the premium for the traveling to Asia and Europe. Okay, so you can see this part represents the number of days. This part represents the policy holder itself to Asia, to Europe. This one is the policy holder and the spouse to Asia, to Europe. This one is the package for the whole family to Asia, to Europe. So if you stay 1 to 5 days, that is the cost that is given. It's stated over there. If you stay from 6 to 10 days, the cost given, 11 to 18 days, and the annual premium. Annual premium means for the whole year. Okay, now we look at the question. A, what are the factors that influence the difference in premiums for the travel insurance? What are the factors? Can you guess? You see, for example, the policy holder, okay, go to Asia, 39 ringgit, Europe, 53. And then the policy holder with the spouse, 69 ringgit. If go to Europe, 98 ringgit. And then for the family package, 87 ringgit go to Asia, Europe, 133. And also the number of days. If the number of days 1 to 5, there is a price. If 6 to 10 days, this is the price. 11 to 18 days, this is the price. So there are a few things that will influence the difference in premium. Okay, first, is Asia, Europe. Asia, Europe, that is the destination. You can look at the solution down here. The destination will influence the difference in premium. Okay, you go to Asia, 39 ringgit, but then if you go to Europe, 53 ringgit. After that, the duration of travel, that is the number of days, also will influence it. And last thing is the number of people insured. Okay, 1 person, 2 person, more than that. Are you clear, class?
Yes,
Are you
madam.
clear? Yes, okay, so that's
Yes.
you got to remember the destination, the duration, and also the number of people. Okay, now we look at B here. Why is the premium for longer travel period? Gary, can you off your mic, Gary? You forgot to off it. Gary? Thank you. Okay. Why is the premium higher for a longer travel period? Why? The longer you stay over there, it increases the probability of loss to the policyholder. Because you are exposed to what do you call it? For example, right now, we have the coronavirus, right? The longer you stay in a place with the high risk of coronavirus, so the more possibility you will get infected. That is why the longer of travel period increases the probability of loss to the policyholder. Okay, now we look at the third question. Shahel's work as a photographer requires him to visit many countries in Europe. So he need to go here and there because he is a photographer. Okay, within a year. He will visit a country for 12 to 15 days. Which insurance is suitable for Shahel to buy in relation to his job, and give your reason. So out of this range over here, the number of days we know that is between 12 to 15. He can buy this one, he also can buy this. Okay, then he is under this category, but then he's going to Europe only. So if he bought the annual premium, it costs 280. But if he buy this one, 11 to 18 only, it costs 127. This is just for one time. Okay, so which insurance is suitable for Shahel to buy in relation? So if he is traveling many times, okay, you see he visit many countries in Europe within a year. So this is just for one, he have to pay 127. If twice, he will have to pay 254 ringgit. Not much different from this one, right? And then if you go 3 times, it already exists the price of 280. So the better one is he go for the annual premium. Okay, so you can see the given solution down here. See, Shahel should buy annual premium travel insurance for countries in Europe as it is more economical than buying insurance for 11 to 18 days per trip. Okay, so they use this word, economical, meaning that it is cheaper. Okay, hopefully you will understand. Now we move to page 81. Okay, we are going to calculate the premium for life insurance. Okay, for life insurance, the amount of premium paid depends on the chosen face value. Okay, age, the older you are, the higher premium you have to pay. Gender, male, female, and smoking status, so a smoker or non-smoker. Okay, this premium calculation is based on the premium rate schedule for every RMX face value. Okay, let us look at what is the meaning of the term given over there. You look at the info bulletin here. The premium rate schedule provides the gross amount of premium charged to the policyholder. This one will always be given in the form of table. We are going to go through that later on. Second, the face value of policy. Okay, the face value is the amount of money chosen by the policyholder to obtain insurance coverage. It is chosen by you yourself. For example, you want to insure a sum of 100,000 or you want to insure a sum of 300,000. These are called the face value. Okay, this amount will be paid to the beneficiaries, meaning that the policyholder, or if there is a death of the policyholder, then the beneficiaries will be the family members. Okay, in the occurrence of death or total and permanent disability of the policyholder on the policy's maturity date. Okay, let us do the calculation now. You look at the question given. Example 2. The annual premium rate schedule per 1,000 ringgit. This one is the under this part here, the RMX. Okay, face value of a yearly renewable term insurance offered by Syarikat Insurance XYZ is as follows. Okay. Sorry. That's the face value. Sorry. Okay. Now we look at this table here. So from age 35 to 40. Okay, that differentiate the male and also female, non-smoker and also the smoker. You can see, so the rate is given over here. For a male non-smoker is 2.12. For a male smoker is 2.72, which is higher. Whereas for female, 35, the age is 1.45 for non-smoker and then 1.78 for smoker. Okay, now let us see the question given here. Why does the premium rate increase as the age increase? So you got to know this part. Why it increase when the age increase? When you get older, it's certain that you have more disease, right? Okay, so you can see the solution given. Premium rate increase with increasing age because the life expectancy of each person decreases with age. We won't become healthier and healthier. Okay, we are going to get more and more sickness when you are getting old. So the life expectancy of the person decreases with age. That's why you can see for this one is 2.12. When you get older, it's 2.18. 2.26 is getting higher for the rate. Okay, and then why the premium rate increase for smoker? Of course, if it is a smoker, you know you are exposed to illness faster. So you can see the solution down here. The probability of a smoker being exposed to illness is higher than that of a non-smoker who lives a healthy lifestyle. Okay, probably the smoker, he will get a lung cancer and so on. Okay, that's why for a smoker, you can compare, it is higher with non-smoker. Now we look at B here. Based on the table, calculate the annual premium for each of the following situations. Number 1, Mr. Guan wants to buy an insurance policy worth 100,000. He is 39 years old, healthy and non-smoker. So we need to calculate the premium right now. Let's see, you refer to the formula, the premium, this one. It's equal to the face value of policy over RMX and multiply by the premium rate per RMX. So I'm going to show you straight away the premium is equal to the face value. The face value is 100,000. So over the RMX is this one just now, per 1,000. So it's per 1,000 and then you multiply. Look at Inject Guan's age. He's 39 years old. 39 years old, male, non-smoker. So it's 2.49. Therefore, you just multiply by 2.49. Okay, cancel the 0 at the back. It means 100 times 2.49. So the premium paid is RM 249. Okay. And then we look at the second question here. Do you have your book with you? Maybe it's easier for you to see because I have to show you many things over here. Do you have your book with you? Class?
Yes, we do.
Yes.
Yeah.
So you can see if my wording is very small over here, then you just refer to your book. Page 81, this one. Okay, look at the second one. Madam Shapuva is 36 years old, healthy and non-smoker. So you refer to non-smoker. She wants to buy an insurance policy worth 250,000 and wants to add a critical illness policy. She wants to add this one. Syarikat Insurance XYZ offer a critical illness policy with a coverage of 30% of basic face value and the premium rate is 1.77 per 1,000 based on Madam Sapura's age and health status. So there are two things that you need to pay right now, which is the basic premium. I draw it for you for here, highlight for you over here. Okay, she need to pay for the basic annual premium and then she also need to pay for the Where is it already? The critical illness, which is the, let me see, critical illness, that is the additional critical illness premium. Okay, so for the basic premium, it's easy. She just need to do calculation from here, whereby the basic premium is equal to 250,000 over 1,000 and multiply by, if you look at her age and also the category, non-smoker. So she is 36 years old. Look at female. 36 years old, non-smoker is 1.5. So you multiply by 1.5 over here. That is the basic premium. But then when you are going, she is going to add the critical illness policy. So critical illness policy with the coverage of 30% of her face value. So we need to calculate the 30%. Okay. So the face value will become 250,000. You multiply by 30%. Okay, 250,000 you multiply by 30%. How much is it you can get from your book? Let me see. How much is it already? I don't want you to show. I don't want to show the calculator lah. Okay, it's equal to RM 75,000. I want to save the time. Okay, so from here, the 75,000 becomes the new face value for the critical illness. You are going to divide 1,000 like this one just now, and then you multiply by 1.77 this one, because that's a premium rate for additional critical illness. So you can see the given solution down here. Okay, from the table, the premium rate is 150. Okay, that is the one that we did. This is the first one that we did just now. The annual basic premium, 250,000 over 1,000, you multiply by 150. So the answer is 375. And then she have to add on the critical illness. So the face value of the critical illness is 30% out of the face value from the basic premium. The face value of the basic premium will be 75,000. So 75 over 1,000 again, you multiply by the given rate 1.77, so you will get 132.75. Therefore, Madam Sapuva, her annual premium, she need to pay a sum of 507.75 for both basic premium and additional premium for critical illness. Okay? Are you okay, class? Do you have question?
No question.
Clear, madam.
Yeah, hopefully you are not sleepy. You have to input a lot of theory and practical thing right now. Okay, so we continue. If you don't have any questions, so that is about the calculation of life insurance with the additional critical illness. Okay, continue from here. We are going to carry on with this, the calculation of the premium for motor insurance. Okay, you look at the motor insurance. Hold on, give me some time. Okay, motor insurance is calculated based on the motor tariff. Okay, motor tariff, you can see again what is motor tariff. Here on the right, the info bulletin. Sorry. Okay, this part here. Tariff is a list of fixed prices used to organize and control premium charges and wording of policies under the Insurance Act. So this tariff is given by the motor tariff. So you don't have to worry, you just need to refer to the motor tariff later on. I'm going to show you what is a motor tariff later on. Okay, it's a list of fixed prices. And then insurance company will add additional charges to the minimum premium, such as operating expenses, agent commission, additional charge, coverage, and others. Okay, I'm going to talk about this with you later on. You don't have to worry. Now this part. Motor insurance is calculated based on the motor tariff that provide the minimum premium for the insurance coverage. These tariffs are regulated by law. The amount of the premium depends on the factor such as the type of vehicle and its usage, the engine capacity, the type and amount of coverage desired, and the premium charge are different for each motor policy. So you remember in earlier, just now we talked about the motor policy, we have the 4 types of policy. And the first one is under the Act. The second one is the third-party policy, followed by the third party with the fire and theft. And the last one is a comprehensive for this policy. So it's all actually drawn here using the puzzle. The first one is the Act policy, the third-party policy, the third-party fire and theft policy, and the last one is a comprehensive policy. Okay, for each of these, let us look at how is the premium to calculate the premium from each of the policy. For the Act policy, you can see here, it depends only on the engine capacity of vehicle. Okay, and then for that one is for third party and also Act party. These two one, you can see the pointer is pointing to this. And then for the third party fire and theft policy, if you got this one, the premium rate is 75% of the comprehensive policy's basic premium. Okay, so it is less lah. If you want to go for this one, for sure it is cheaper. The comprehensive policy is the most expensive among all of it. So it depending on the engine capacity and the market value of the vehicle when you want to insure it. Do you understand what is the meaning of engine capacity? For example, my car, I'm using Vios. Vios, the engine capacity is 1.5. I'm sure your father have a better car. For example, if you go for Honda City or Mercedes or Camry, or maybe you have the Fire, or maybe you have what do you call it, Fortuner or Harrier. So anybody have a Harrier, for example? Anyone? You own Harrier at home? Your parent own Harrier at home?
Yes.
No. Okay, how much is the capacity for Harrier?
I don't know.
You don't know. Okay, never mind. You go back home later on. You go and see the back of your father's or your mother's car. They are written over there 2.0 or 1.5, something like that at the back. This one is referring to the capacity. For example, my V, I think my V is 1.0. And then last time we have Kanjil, we have Viva and so on. I think that one, the capacity is even lower, which is less than 1,000. Okay, this 1.5 means 1,005, but for sure it's not exactly 1,005. It is actually less than 1,005. Okay, we don't know why, because that is the engine capacity. This one 2.0 is actually 2,000, but then for sure it is also less than 2,000. So when you finish the class later on, you go to the car porch, you go and see how much is the capacity of the engine owned by your parent. Okay. So now we are going to continue with the motor tariff. So this is the motor tariff that you can see. That is the red. So the table below shows the premium rates under the motor tariff for motor policies issued in Peninsular Malaysia, Sabah and Sarawak. This one also you can search online. Everything is exactly the same. So you can see there is an asterisk given. For comprehensive policy, the rate charge is for the first 1,000 of the sum insured. And then the source here is motor tariff 2015. So far, they haven't changed it yet. I haven't seen any 2020 motor tariff. So meaning that the premium rate, it is still the same, whereby they still follow the same table given below. Okay, now let us see on how to do the calculation for the premium of motor. Just now you calculate the premium of life insurance. Remember, that is the face value over RMX multiplied with the rate. But then when it comes to motor, it's a bit different for Peninsular and also Sabah and Sarawak. You can see the formula given here. For the first one, if you stay in Peninsular Malaysia, the basic premium will be equal to the rate for the first 1,000 ringgit, okay, plus 26 ringgit for each 1,000 or part thereof. No need to worry about this. I'm going to show you what is this later on the value exceeding the first 1,000. Okay. For example, if you bought new car, you are going to insure your car for a sum of money. If you buy a very good car, for example, you buy what car? What car do you like? Tell me, what car do you like? Anyone? What is your dream car?
Kancil.
You want Kanjil? Give me a better car.
My V, madam.
Okay, my V. Okay, we go for my V. For example, your sum assured for my V is 50,000. You bought new car. Okay, so the rate for the Yeah, you have any other car? You don't like Myvi, huh? Never mind, we just go on now. You found one Myvi, what? Okay, so the rate for the first 1,000, we are going to follow if you are in Peninsular Malaysia. So if you bought a comprehensive policy, Myvi, the capacity of the engine is less than 1,000. So we are going to choose this one. This is the engine capacity. They start with 1,400. Okay, under the comprehensive policy, it will be 273.8. So that is the first 1,000, which is 273.8. I write down here. Okay. The sum assured is 50,000, meaning that the first 1,000 you already deducted, so you still have remaining of 49,000, right? There is a meaning over here is 26 ringgit for the 1,000 or part thereof. So 26 you have to multiply with 49 because it's for each 1,000. So 49,000 you multiply by 49 times. Okay, so over here you plus 26 times 49,000. This one, you can write down times, not write down by bracket like me. Okay, that will be the under the basic premium of the comprehensive policy. This one, okay. So you do the calculation and then you will get the answer. Okay, and then if it is for Sabah and Sarawak, the basic premium will be 1,000 for the first one. Like just now, again, is this the same 273.8? But then the premium is cheaper here. It is 20 ringgit 30 cents for each 1,000 or part thereof on the value exceeding 1,000. Meaning that on the right part over here, you are going to use 23 ringgit multiplied by the rest, the remaining of the 49,000. And then you will get the sum of the amount insured. Okay, so let us look at the example given here. Example 3, this one. Okay, Injet Ramlee owns and uses a Proton Exora 1.6. So you can see 1.6 is the engine capacity. The engine capacity is 1,600 cc. Okay, in Peninsular Malaysia, the information of the car as follows. The sum assured is 60,000. The age of the vehicle is 5 years. And then the NCD is 25%. NCD, when you first bought your car, the NCD is actually 0. It goes year by year. I can show you the NCD on the right. The NCD means that it's a no claim discount. This one. So next time when you buy a car, this is the NCD right now. For the first year, it's 0%, meaning that you have to pay full for the sum assured. For the second year, when your car is 2 years old, you will have a discount of 25%. Okay, when your car is 3 years old, you will have a discount of 30% for the premium. And then continuously, 4th year, this is the percentage. It is fixed until the 5th year and onwards. So no more discount after 55, meaning that for the 6 years, no more increasing and not no more discount. For the 6 years, it is fixed already to 55. 5th year, 7th year, 8th year, 9th year, 10th year, 20 years, your car already 20 years old, it is still 55%. No more extra. So this one is extra knowledge for you only. NCD means no claim value. You also can see in your book here. No claim value, no claim discount, sorry. Okay, that will be issued if no claim is made against your policy within the period of coverage before the policy renewal is met. Okay, I don't want to talk so long over here. I'm going to refer to this directly. So the NCD here meaning that if you didn't claim your policy for the first year, or you bought this car, if you didn't claim your policy for the first year, then you will have a discount like the table that I've shown you just now. But then this one is not logic because the age is already 5 years, the NCD is 25%. Maybe he started buying this insurance late, so he has this much of NCD. Okay, so this NCD is like this. If you don't claim your insurance, meaning you didn't make any accident, no accident at all. So the following year, you are going to pay the premium again, meaning that there's no loss to your car, right? You didn't claim the insurance. That's why you will have the discount continuously. If you already claim the insurance, maybe because you hit into somebody's car and then your car is damaged, the other car also damaged, So you have to claim the insurance, right? So therefore, you have to restart your insurance. You have to restart from zero everything after you claim your NCD over here. No more. Okay, something like that. Huh? So we look at the situation of this question here. I wrap this off first. Very messy already. Okay, we look at the question again. Sum assured 60,000, age of vehicle 5 years, and then 1,600 cc, and seating is 25%. So they ask you to calculate the gross premium for Inject Ramli's car under the comprehensive policy. You have to calculate this one. The third party fire and theft policy, and the third party policy. So we have to calculate 3 types of policy, the gross premium for 3 of it for Inject Ramli. Let's go through the comprehensive policy. So the comprehensive policy, we have to follow the formula that we have earlier. This one, the one that under the Peninsula Malaysia. Okay, because it's there in Peninsula Malaysia. Okay, so you can see okay, up here, because his car is already, yeah, what happened? Because his car is 1,600 cc, this one is the category, so you have to refer to 1,600 cc over here. Log off the rest. This one, okay, and then he drive in Peninsula Malaysia, so under the comprehensive policy, it is 3,005.5. Okay, so with the sum insured of 60,000, you can see the solution given. For the first 1,000 is 305.5 from the table given. And then because the sum assured is 60,000, right? So the first 1,000 is already deducted 1,000, you still have 59,000 to go. So it's 59 multiplied by 26 ringgit like I showed you just now, because 26 is the fixed price already. So the answer is 1,534 over here. Okay, after that, when you add up these two, it is 1,839.5. Okay, and then given the NCD, the no claim discount is 25%. So you multiply 839.5 with 25%, you will get 459.88. This one. Let me show you a bit of using the calculator so that next time. I have mine policy just now that I show you. Later I show you. So when you're using the calculator, it's easier for you to calculate. Let us look at the sum again. It is 895.5. Sorry, 839.5. 839.5. You are going to multiply with the NCD of 25%. So you multiply by 0.25. So we will get 209.88. Okay, that's why. Yeah, I forgot the thousand. 1839.5. Sorry. 1839.5 multiplied by 0.25. So you get 459.88 here. This one. Okay, right? So the gross premium is equal to C minus D, the basic premium minus the NCD, which is 1839.5 minus 459.88. So next time, I think for sure you feel very troublesome to write down in the form of table like this, right? Don't worry, you can go straight away in the calculation of the basic premium. Okay, to calculate the basic premium straight away, you are going to add up the basic of 1,000, referring to the 305.5 straight away. You just make it equal to 305.5, then you plus with the 26 ringgit times 39, like what I did just now. So that is the basic premium, which is 1839.5. Okay, then you calculate the NCD from here. So to get the gross premium is 1839.5. You just minus the NCD. So you don't have to show this table anymore. Okay, now we look at the premium for the third party fire and theft policy. This one, the second one. You give me some time, I write off everything, because I think you're confused if I have so many things written here in front. And also you can read your book. Okay, so for the third party policy, fire and theft, you can refer to the solution given here. Okay, the basic premium, we follow what we have found out for the basic premium for the comprehensive policy just now. 1839.5. Why do we multiply with 0.75? It's because it is the 75% only from what we have learned earlier here. Can you see this? Can you see this? This is under the third party fire and theft policy. The premium rate is 75% of the comprehensive policy's basic premium. That's why from the comprehensive policy that we have earlier, 1839.5, we multiply by 0.75, we get 1379.63. That's the basic premium for the third party fire and theft policy. Okay, so from there, you calculate the NCD. Again, the NCD will be different, which is 1379.63 times 0.25. So you can see the answer is 344.91. Okay, exactly the same. Then from here, you just use the basic premium, you deduct the NCD, you will get the gross premium. Okay. Then the next one, we are going to calculate the third party policy. Third party policy, straight away you can get the answer. So refer to the same engine capacity again, 1650. So you can see the third party policy is 135. Straight away, the basic premium is 135. And then you calculate the NCD. So 135 multiplied by 0.25, the NCD is 33.75. You can see. Then you just minus from it. The answer is 101.25. Are you okay, class? This is almost the end already.
Okay lah, madam.
Okay lah.
Okay lah.
Yeah, it's okay.
Okay, I show you one of the policy that I have bought last year that is for my car. Not this one. This one. I'll show you this one first. Okay, so I bought the policy from the Atika. So you can see they show you everything. Okay, what are the covers or benefit provided? Here, the second part. This policy cover the third party bodily injury and death, third party property loss or damage, and loss or damage to your own vehicle due to accidental fire, theft, or accident. Exactly just like the comprehensive premium. Okay, you can see it's written over here, comprehensive private car insurance. So that one is the coverage for the policy. So if you want to buy additional policy from there, you can see there are optional benefit that you may wish to purchase over here. This is the additional premium whereby we will have this. If you want to cover the windscreen damage, maybe you always travel long distance, you scared the rock or anything will damage the windscreen, so you want to add additional premium, you can. Or the passenger liability cover, damage arising from flood, storm, and tempest, compensation for loss of use, current year of no claim discount, and so on. There are a lot of things. Okay, so just to let you see only. And then when it comes to the insurance premium, okay, then you can see my videos over here. So the cubic capacity, we are not going to see. Actually, this part, the seating capacity 1497 is referring to the engine capacity. So I told you just now, 1.5 doesn't mean 1,500. It's less than that. Okay, and then you can see my sum assured is 30,000, this part. And then the annual NCD is 55% because it's already more than 5 years. Okay, but then after the calculation, you can see 35,000 with 55%. That is the, what you call it, the information given. So if I follow this, mine is under this category. I use purple color. So mine is what less than 1,005, this category. I drive it in Sabah and Sarawak, and the premium that I bought is comprehensive policy. So it at least 220 I need to pay. My sum assured is 30,000. So for the first 1,000, my premium, my basic premium is equal to this one, 220 plus, because I bought 30,000, right? So the remaining is 29. So I have to multiply with 20 ringgit 30 cents. That is my basic premium. Okay, so if I calculate, go on, I move it left. Okay, so 220 plus, you can do it together, 29 times 20 ringgit 30 cents. So after I multiply, it is supposed to be 808.70 cents. Then my NCD is 55%, right? So at 08, I need to calculate my NCD. My NCD is 55%. So from the amount that I have over here, I'll multiply by 0.55. NCD is 444.79. 444.79. Okay, so which means from here, the basic premium, I have to minus the MCD. Okay, therefore it will be, is my answer correct or not? Wait, I check again. 29 times 20.3 plus 220. Okay, correct. So I minus my NCD just now. It is 444.79. 444.79. So I supposed to pay 363.91 for my premium. 363.91 for my premium. But what I have over here, you can see my payment is not 363.91. I have to pay, let me show it to you, 378.09. Why is the amount different? The amount different is because there are additional charge that is not included. Okay, for example, if you buy your policy from other company, there will be other charges, like, that's why we have this down here. You can see this part, they give you information here, this one. However, the premium payable may differ from the actual value of the premium that the insurance company may charge. There are additional charges like commission to the agent, service tax, and stamp duty. So you can see from my premium over here, I have this, although I have discount from them, but then the price is still different because they have service tax, they have stamp duty, and then they have commission for the agent. Okay, class? Are you okay?
Yes, okay.
I really talk a lot today. Okay, so I'm going to end the lesson. Before I end it up, again, you take your attendance in GC and then hand in your exercise for 2.2H. Last one for chapter 2. As for today, I want you to do the exercise on 3.1B, all the 3 questions given on page 84. This one, number 1, number 2, and number 3. Actually, this is also quite easy. Just make sure you know how to calculate it. So, number 1, 2, 3 is up to you, but I don't require you to copy down now because the question is very long. You can just directly answer the question after you have written down the self-practice. Question number 1, you can straight away answer it. Okay, 3 questions given to you as your homework. Okay, so that's all for today. I'll see you on Friday again on 7:30. Okay, yeah, you're welcome.
Thank you, madam.
Thank you.
Thank you.
Bye, madam.
Have a nice day.
Thank you, madam.
Okay, bye.
Nice day, madam.
Yeah, you too. Have a nice day.
Have a nice day, madam.
Okay, have a nice day, everyone.
Thank you.